Meantime, Treasury's got a new report about the Made in America tax plan. Pretty interesting numbers. Kayla Tausche's got them. Hey, Kayla.
Hey, Carl. Treasury putting a little bit of new detail behind the tax changes underpinning the American Jobs Plan that it says would raise about $2.5 trillion over 15 years by raising the corporate tax rate and establishing minimum tax rates for companies operating both here and overseas, and reversing some incentives for activities involving fossil fuels. Treasury officials say they are aiming for a deal by the end of this year on a global minimum tax that it's currently negotiating with the international community, and that the U.S. is confident it will reach one because some of the changes that it is proposing here in the U.S. were specifically requested by those negotiating partners. In the meantime, Treasury says profit shifting overseas remains at record levels, that the 2016 tax law did not change that as planned, and that taxes by U.S. companies recorded in some 7 tiny tax havens still stand at greater levels than taxes recorded by U.S. companies in China, Canada, Germany, and a host of other countries combined. Now, in the U.S., there is also a proposal for a 15% minimum book tax that would apply to companies who are currently not paying any taxes. And Treasury estimates that about 45 companies would be subject to this new tax, and they would pay an average $300 million apiece if this were to be implemented. Treasury Secretary Janet Yellen said, taken in aggregate, all of these changes would be expected with the American Jobs Plan to add about 1.6% to GDP by 2024. But this comes as the Penn-Wharton budget model earlier today suggested that the American Jobs Plan, when you take the tax and spending provisions together, would lead to negative economic growth in the U.S. for each of the next 3 decades. Treasury officials said they disagreed with the overall finding of that report, that they believe that these plans would be decidedly pro-growth. But notably, Carl and team, Treasury did not provide much new data and many new numbers on how much each of these provisions would raise at different levels, and how likely each one of them is to succeed.
Shepard Smith here. Thanks for watching CNBC on YouTube.